Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. Some real estate investment trusts, or REITs for short, have been hammered due to high interest rates. That's because high interest rates drive up the cost of borrowing, cut into margin, which leads to reduced profits and free cash flow. And while the Federal Reserve has said interest rates are coming down, the exact timing is open for debate. On top of that, when interest rates do come down, they're expected to remain above pre-pandemic levels. Not all REITs suffer in high interest rate environment, though. Mortgage REITs, or MREITs, tend to do well in high rates environment. MREITs provide financing for income-producing real estate by purchasing or originating mortgages and mortgage-backed securities, or MBS for short, earning income from the interest. One MREIT that has been doing exceptionally well since the start of 2023 is Angel Oak Mortgage Inc., traded on New York Stock Exchange under symbol AOMR. John?
Yeah, thanks, Mo. Angel Oak is focused on acquiring and investing in first-lien non-qualified mortgage loans, or non-QM, and other mortgage-related assets in the U.S. The main page of its website actually notes that the company is investing in the American dream, which includes having a nice home. And it does so through, again, non-qualified mortgages or non-QM real estate. Non-QM loans are for borrowers who do not meet the strict traditional lending requirements of a typical qualified mortgage. Big banks may not lend money to potential home buyer because they have a history of bankruptcy or foreclosure, have debt, no credit, are self-employed, or even recently divorced. Now, not all non-QM loans are created equal. Thanks to strict underlying expertise, REITs like Angel Oak only invest in high-quality non-QM loans, and this helps Angel Oak deliver more accurate risk and return analysis.
John, before we go into any details, let's talk a little bit about benefits of investing in non-QM loans.
Well, the big benefit is higher interest rates. It's easier for house hunters to qualify for a non-QM loan than a qualified mortgage, but they are a more expensive way to borrow. They also typically need to put down a higher down payment. For some non-QM borrowers, the minimum down payment is 15 to 20%. The typical down payment for qualified mortgages is around 8% for first-time home buyers. And because non-QM loans aren't bound by the rules of the Consumer Financial Protection Bureau, or CFPB, they can't be purchased by Fannie Mae or Fannie Mac. The non-QM market is growing fast too. 2015, the non-QM industry was worth zero. By 2020, it was worth $50 billion.
Let's talk numbers here. It reported strong first quarter results.
Yeah, in May, Angel Oak reported first quarter net income of $12.9 million, or 51 cents per share. That's up significantly from $530,000, or 2 cents per share in the same prior year period. Net interest income advanced 26% to $8.57 million, while distributable earnings also improved to $2.8 million, or 11 cents per share. Now, at the end of the first quarter, Angel Oak held a residential mortgage whole loans with a fair value of $368.4 million. Management actually noted that momentum from 2023 continued into 2024, having increased net interest margin for the third consecutive quarter through consistent loan purchases and securitization. To that end, the company announced in April that $300 million securitization deal to fund additional loans. The company is looking to grow its portfolio with a target of $150 million to $200 million in loan acquisitions in the second quarter alone. It also plans to issue another securitization in the third quarter of this year.
It declared a quarterly distribution of 32 cents per share.
Yeah, as a REIT, Angel Oak needs to legally distribute at least 90% of its taxable income to shareholders in the form of a dividend. May 7th, it declared a dividend of, as you noted, 32 cents per share, or $1.28 per share on an annual basis, for a current yield of 10.32%. Now, in many cases, dividend yield comes at the expense of a lower share price, because share price and dividend yield go inversely to each other. This isn't the case, though, with AOMR stock. In addition to providing investors with a frothy high-yield distribution, Angel Oak stock is also on the move. As of this recording, it's up 22% year-to-date, 83% year-over-year, and up actually 218% since the start of 2023. AOM stock has room to run, too, trading currently at around $12.27 per share. Angel Oak stock needs to climb around 9% to reach its August 2021 record high of $13.33 per share.
Thanks, John, for your insights. Just to recap, Angel Oak Mortgage Inc. is an MREIT focused on non-MQ loans, a lucrative growing segment of the U.S. mortgage market. It recently reported strong first quarter financial results with big gains in net interest income. The company recently executed on a $300 million securitization deal to help facilitate high-quality loan purchases and is looking to grow its loan acquisition portfolio with target of $150 million to $200 million in the second quarter alone. The outlook remains solid for Angel Oak stock too, with another securitization in the third quarter and to grow net income, which will help cover expenses and its high-yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.